Ladies and gentlemen, we have one panel before the break. It's a Fireside chat with the Private Sector Foundation. We have some very good people on that panel. I don't want to preempt too much, but we're going to speak about the Catalytic Fund. And there's so much good stuff in there to do surgery on. Like we said, we are surgeons and we are farmers. So in keeping within that line, let's do some extra surgery on this Catalytic Fund. To do that for us is none other than Alan Lwetabe. Alan is the Director Investments at the DPF Fund. He's also overseeing the startup. He has a startup ecosystem which we'll speak to. Alan, please, welcome to the floor. Take us to the Fireside chat. Thank you.
Good morning once again. I know we are pressed for time, so I won't bore you with my very light CV. But there is a very interesting conversation that has come to my attention over the last 6 months, and I felt it was important for this audience to hear the initiatives different interested parties in our ecosystems are doing to address the challenge of local capital being deployed to local businesses. So our next two speakers are leading different initiatives in that area. And I felt that hearing from them on what they are working on will also offer a hope, actually. I think in this room we need hope. It will offer hope on how things are likely to shape up in the next couple of years. Allow me to invite, she's my boss in another space, Ms. Damali, Ssali, who works at the Private Sector Foundation, and she will be sharing later in her introduction what she's working on. She will be joined by my student in another life, Ivan Karugaba, a very seasoned engineer in electronics, who is also doing some fantastic ventures, and I think I have given him the flu of wanting to change this market as well. To set us off, guide me. How many minutes do we have? 30. Okay. So Damali, Ivan, use about 2 minutes just for introductions, just to share your minds. Where are you? What are we working on? And then we can delve into the topic on the catalytic funds. Thank you.
Okay. Good morning, ladies and gentlemen. My name is Damali Ssali. I am the Chief of Programs and Projects at the Private Sector Foundation Uganda. And I don't know how many of you know about Private Sector Foundation Uganda, but I'm going to use my 1 minute to talk about Private Sector Foundation Uganda. We are a business membership organization. We do policy and advocacy on behalf of our members. We have 310 members at the moment, and they are clustered into sectors, including manufacturing, agriculture, telecom, banking and insurance, professional services, where CFA actually falls. And our mandate is to do policy and advocacy on their behalf. And we are also, so the likes of Casita, Uganda Manufacturing, Uganda Bankers, all those are members of PSFU. And we represent about 3.5 million enterprises below us. This also includes Federation of Small and Medium-Sized Enterprises. We are also the focal persons of the East African Business Council, COMESA Business Council, and the African Business Council. So we do represent the entire business community in the country. And we'll delve into what we're working on for the Catalytic Fund.
All right, Ivan.
Thank you very much, Alan. My name is Ivan Karugaba, and I'm an engineer by profession. But I run a company called Lwera Electronics and Semiconductors. which is a consortium of over 20 companies doing electronics design and manufacturing locally. And what we are doing is trying to develop an ecosystem. The ecosystem is quite big. Things like semiconductor design and manufacturing, things to do with artificial intelligence. We had the previous speaker say, if you see returns that are too big or too sweet, it's a lie, but I don't know, those of you who follow the global markets, I think you have been able to see a company called NVIDIA. Just last year, the company grew over 260%. And such emerging technologies and frontiers, I think it's about time that Uganda looked into it. And we are glad that through our government, government of Uganda actually gives out grants for these kind of deep tech and impactful sectors through the Science, Technology and Innovation Secretariat. So I'll be able to share in detail what we do and the opportunities we have for young people in innovation, research and development. Thank you.
All right, thank you both Damali and Ivan for those intros. Now to speak to our topic, it's largely looking at how do we catalyze local capital, Uganda shillings, to be invested in Ugandan businesses. You have both trying to tackle this problem. Let me start with Damali. From the Private Sector Foundation, what is the problem you have seen leading towards the solution Catalytic Fund that you are developing? What is the problem that you are seeing from the private sector side? And Ivan, you could also speak to the problem that you are seeing for the semiconductor electronics space.
Right. The biggest problem we've seen, of course, PSFU, we've been in existence for 29 years. In those years, we've been doing policy and advocacy, especially around capital, cost of capital to be available to businesses. We've been doing it for like 29 years. But of course, over time, we've realized that we need to come up with our own solution. Just policy and advocacy itself is not sufficient. So we've decided to design what we're calling the Private Sector Catalytic Fund that is looking for providing capital to SMEs, young people, women, that doesn't require collateral and is patient. So it will be designed in a way that, depending on which value chain you are, if you're going to, you're in horticulture, we'll design your capital in a way that you can pay it back within the value chain that you're in. If you're in coffee, that will be designed also in a different way. But uniquely, we also are cognizant of the fact that not every enterprise in Uganda has capacity to meet the due diligence requirements that the other WhatsApp group was talking about, where they look at 500 companies and only pick 5 because those are the ones that meet the due diligence. So the Catalytic Fund is saying, but what happens to those other 495 actually? Maybe there are 100 of them that may be viable if they are supported. We know that enterprises in Uganda begin with the one man, the one woman, and then they grow. But sometimes that one man, one woman doesn't have all the capacities to be able to scale it. So the Catalytic Fund that we're designing will be one half capital, non-collateralized capital, patient, but the other half, it will be business development services. For those enterprises that are failing due diligences, are failing to get to that next stage of getting private capital, they're not meeting those requirements, but we know why they're failing and they can be given support. So that other half will be grant financed. So, and that will be supporting them on the business development services so that they can get to a point where they can either attract capital through the private equity, through the banks, or they can thrive and be able to grow. The critical thing about the Catalytic Fund is that we're trying to build from the bottom. If you don't have enough enterprises that are viable enough as an economy, you can't grow anyway. So the Private Sector Catalytic Fund is trying to look at those two problems in one way. And it's looking at impact investing. Actually, currently, the global market value of impact investing, according to the Global Impact Investors Network, is at $3 trillion. There's $3 trillion globally out there that that is in impact investing. And the private sector catalytic fund is looking at actually impact and ensuring that there is a social return. That's why we're targeting SMEs. It will be targeting also youth enterprises, and it's also going to be looking at the business development services. This global value of impact investing capital around is estimated to grow to at least 7 trillion within the next 10 years. So we need to develop vehicles or instruments that can attract that kind of impact capital, that can look at things that are targeting those enterprises that naturally may not be looked at by commercial banks, may not be looked at private capital. Who is looking at them? How is someone helping them? And this is what the private sector catalytic fund is trying to deal with.
Ivan, on your side, what's the problem? What are you seeing in the semiconductor electronics that we're trying to solve?
The actual problem is, let me just give a real life scenario. When I was starting out about 10 years ago, I worked with Kira Motors at the start. That is before I left off for China, Shenzhen, to work in one of the world's biggest factories. And what I saw was sort of life-changing. When you look at these emerging technologies like AI, electronics, semiconductors, actually these are issues of national security. They are very high impact, but it is very difficult to get a local investor to invest in such things. So as you go out to pitch, it is very difficult actually to convince a Ugandan that, okay, look here, I'm manufacturing, personally I manufacture computers, but to get a Ugandan to invest in your business, it will be outright. He will tell you these are things for Chinese. But when you look at how fast the global economy is running, these are some of the biggest anchors for this very fast-paced development. And actually, they give some of the best returns to date. Okay, we always argue that, okay, Uganda is predominantly agriculture-based and it's our key activity, but I always argue with people and tell them there's no way, however much you plant maize with the acreage the size of Africa, you won't make as much money as Apple is making, even in one quarter. And we always argue, I don't know, till morning, but that is the fact. You find one company in the United States, its revenue in one quarter is way larger than our GDP. So in Africa, we have very brilliant minds, actually. Before I came here, I've been able to meet very innovative engineers across Africa. We're in Nairobi, and we are convening under the Royal Academy of Engineering. So when you look at what young people in Africa are doing, last year we were in the UK, but I managed to meet a young gentleman. He's into quantum computing. So when you look at such fields of deep tech, mostly the governments are the ones that actually put out the initial investment. But when you look at the leverage such investments give a country, for example, that gentleman's company, its biggest client is the UK Royal Navy. And through such technology, you find that the UK has sort of more advanced and is quite ahead of the rest of the world. So at Lwera Electronics, we do have a fund, and actually we are financing young people. As I think we deploy the same mechanism as Madame Ssali. We don't focus so much on the books and the projections, but the bigger picture. are we building the right human capital that will take Uganda and Africa to the next level to compete globally? So our focus is quite different from the usual.
Okay. Thank you very much for those takes. But just to deepen the conversation a bit, on the catalytic funds you're both building, who are your initial anchor investors or funders? Who are those parties you are focusing on? And then for this audience, we can use the same breath. What would be your message? This room has fund managers, largely, and investment professionals. What would be your message in regards to the work you're doing? What would be your message to them?
Great. I didn't mention that the private sector catalytic fund is going to be domiciled in Uganda. And I do remember when we're doing the feasibility work and a lot of the consultants were advising that it shouldn't be domiciled in Uganda for reasons we all know. And I'm glad that Capital Markets Authority has talked about the regulatory changes that are going to happen, the physical incentives that are going to happen so that we can get more FDIs here with the right incentives. The reason why we're domiciling it in Uganda and the reason why it should be domiciled here is that we need to look at a local solution for a local problem and design it in a way that actually deals with the local problem. But in order to do that, we need to do it ourselves. So the Catalytic Fund is looking at domestic investors, actually, primarily, first and foremost, because we are not, allergic to foreign investments, but we're looking also at domestic investments. Look at the likes of NSSF that is required to invest certain percentage of the fund domestically, but NSSF says it also doesn't have enough vehicles in the country to invest in. So we're developing the Catalytic Fund so that there is an investable vehicle for NSSF to invest in, and NSSF, because it's the national fund, it's supposed to also be interested in impact investing. It should be interested in how many young people are actually continuously employed, how many companies are supported at the bottom so that they become savers of tomorrow. Because NSSF at the moment, based on its trajectory, there are fewer people who are going to be saving in future if less jobs are actually created today. So it actually is an impact investor. So we're looking at that. We're also looking at pension funds, other pension funds in the country to be also our anchor investors, looking at the long term, but also taking a Ugandan approach. Your pension funds, you're Ugandan, we're in Uganda. So we expect that you're going to understand when we are saying we should target young people, we should target the youth, we should target women. Someone was here talking about the gender conversation came up here, which sometimes is considered controversial, yet it shouldn't be. Women in Uganda own 40% of the enterprises. So if we're having a conversation about capital, why would it be that I'm the first woman to speak? You see? And if you look at the room, we are everywhere. So we need to ensure that we design vehicles that tackle our contextual problem in a way that we can solve our problem the way we understand it, the way that can actually solve it. If we only look at foreign investors and foreign pension funds, they come with their restrictions, which they're allowed to because it's their money, right? So they'll come with their restrictions and say, no, you do a due diligence, and if they don't pass, sorry, you can't invest in them. And I'm saying, what happens to those? Who helps them to be able to meet the due diligence tomorrow? But who is going to do that? It's going to be a local catalytic fund that is going to be interested enough in those that can't meet the threshold and helping them to meet that threshold. And I think that's critical for us to find local solutions that are developed by us, funded by us. We can't expect other people to fund them. We need to put our money where our mouth is. So we need to look at domestic investors. If there are any high net worth individuals, which is not a typically Ugandan culture, high net worth individuals tend to invest in themselves. But we're also trying to also see, are there any high net worth individuals in Uganda who can invest in such a catalytic fund for impact and for prosperity, for contribution to your country, and then also pension funds and the NSSFs of this world, and even the government. If you're investing, we have a PDM. How do we see that there's a public-private partnership in PDM and ensure that we can use a private sector angle that has an impact aspect to partner with PDM, where we still get what the government wants us to get, but in a way that that those enterprises can thrive even after PDM. So those are the angles that we're looking at.
Right, Ivan?
Thank you very much. as Lwera Innovation Catalyst Fund, our biggest investor is the government of Uganda through the Science, Technology and Innovation Secretariat. And I can say it's a bonus for us because, as Mrs. Ssali mentioned, there are not so many attached strings, and what we are looking at mostly is the impact and development of the human capital, the human capital building. But let me give you a scenario, because we are so anchored into manufacturing and deep tech. We were doing sort of a survey, and in the field of electronics, since I worked in Shenzhen, China for some time, by the time maybe a device as simple as a USB cable gets to Uganda, the price has gone up by over 50% to the final consumer. So what we're looking at the end of the day is, okay, we have people importing some of these things, for example, USB cables, power banks, chargers. Some of the people actually we have convinced are the former importers of these items to join us and set up assembly lines for such items, such that at the end of the day, we have more employment opportunities, we have more human capital development. So just briefly talking about what science and technology is doing different. This time round, it was so deliberate to the point that the people who were awarded these grants are actually the private sector industry leaders. Because previously, maybe people from academia, I'm not saying there's not so much results from there, but this time around, it was more of a deliberate effort by government. We actually partnering with other global industry players, the likes of people like Intel, Qualcomm, that are into the chip design and manufacturing. And from such companies, you may not directly get maybe money, but you may get capital, maybe in form of upskilling the engineers that you have, to mention but a few. But I know in this room there are people who run funds and VCs, and I would really, really encourage you, because this sector, it's more than proven. The global giants, China, US, what's making them fight is some of these things, semiconductor. I don't know if you get that. So I would encourage you to actually look into such ventures. I know you won't be disappointed. The high returns will come, the impact will be there, and also Uganda will sort of be autonomous from some of these.
Right, thank you. We were given some 10 minutes. And before we close, perhaps I could invite the audience if there are one or two questions that you want to share. I see the director has a burning one, and Mariam as well. Please go ahead.
Okay. Thank you very much, Dixon Sembuya, Capital Markets Authority. And I would like to start by thanking you all for your contributions. Very, very insightful. What you shared is quite insightful and edifying. Just a quick comment, specifically on your opening remark, where you alluded to the first presenter, saying that when you see very high returns, you need to think twice. That's a message that whenever I get any platform, that's usually a message that I share, that where you have unrealistic returns, you need to think twice. And I think you gave the example of NVIDIA, and I felt there was a bit of a mismatch, because if you look at the growth of NVIDIA, it's driven by fundamentals, developing those semis that are needed for large language models, generative AI. So if you look at the prices, I think they're just a collective forecast of the commercial opportunity presented by AI, artificial intelligence. So I think we need to differentiate between the two, where those sweet returns are not backed by any sound fundamentals. You need to be very careful, but where there's some fundamentals behind that, I think then it's justified. Well, I think you're a visionary. I've actually followed the semiconductor race, arms race, for about 5 years. So I'm pretty much alive to the wars between the US trying to stop China from developing a viable semis industry. But my question is on the fund and how it works. And what's the criteria for awarding grants? What's your success rate? I mean, if you talk about, say, investees or portfolio companies, I mean, what has the experience been like? I would really like to know what the experience has been like for this particular fund. Thank you.
I think let's take the question from Mariam. She's at the back.
Thank you so much, Al, Ivan and Damali. My name is Mariam Nansuga. I'm a director with Semiconductors. We are an indigenous advisory firm. We do a lot of advisory on BDS capacity building. We focus on indigenous institutions and family-owned businesses. And Ivan, my question is to you, perhaps to understand better, and maybe closely related to what Dixon raised. At what point do you actually assess feasibility and sustainability of your investees, especially because you have a lot of government or subsidized funding at the moment? So when are they ready to stand on their own and become feasible? I also wanted to ask a little bit about innovation versus reinventing the wheel. And bear with me, you can explain better when you give the example of manufacturing your own computers, to Alan's question around what the problem is. Is it the price? Would it be the price locally? Would it be access? So what problem are you actually usually looking to solve, or the companies, the investing companies that you work with? Thank you.
I think there is one more, and then we take the responses.
Thank you for a good discussion. My name is Audrey and I'm from Swedfund, the Swedish Development Finance Institution. And one of our goals is to support SMEs in developing markets. So this fund that you speak about is very interesting. What is the size of the fund? What size of investments, tickets would you invest in these companies? Is it debt, is it equity? You mentioned that it's patient. How long is the plan to recycle it? It would be a very interesting vehicle, and I think if it can kick off, you could provide companies that are then ready for more larger tickets of financing from private equity funds or eventually from development finance institutions. So I'm very curious about this fund and how it's structured.
All right, let's start with Ivan. You got some burning ones. NVIDIA, fundamentals, big returns.
Thank you very much, all. I do agree with Mr. Dixon. I think we're at par. Then you asked a question about what is the criteria, what is the fund about, who does it target. So how the fund is structured is actually we do offer grants to micro grants to people specifically doing electronic product innovations. I would give a vivid example. If someone is, for example, trying to set up a factory to manufacture maybe USB cables, such a person can always approach us, and we see how to support them, maybe in terms of things like the equipment, the material costs, research and development of the product. That is what we offer. Then the criteria is simple. We always have people doing applications. You apply to us. We do evaluations, and we have thematic areas. Anyone doing, for example, medical devices, Internet of Things, AI, consumer products, consumer electronics, and a few others. Then we do evaluations, and after evaluation and a few other processes, we elevate this to our biggest stakeholders, government. Once we agree, we always award this either in cash or in kind. And I think that answers that. Then I'll just marry this reply with Adrian. Audrey, yeah, sorry. Mrs. Audrey. So the size of the fund, right now, we have about, because it's a new fund, we have about $200,000 at the start. And the maximum ticket size actually we're offering is up to 50K. But this is going to be a revolving fund. Like every other year, we look at this fund growing. And as we support these innovations, people actually do, maybe in terms of money and other ways, we do recapitalize this fund such that other people actually benefit from this fund the next time or the next year. And Madam Mariam asked something interesting about reinventing the wheel. When you look at the way we approach this, for example, if I say we're manufacturing computers, we try to put into context what is the problem. The problem is the cost, actually. This technology is so costly to many Ugandans. It may not make sense to you, but actually how it would make sense is, for example, let me give you a statistic from UBOS. 3% of Ugandans have access to computers. 3. So the underlying, actually, some of these innovations we support, we try to localize them, make them so organic to the point that we address the reason why, for example, they are not accessible to many. For computers, it's the cost and the energy efficiency. Most of the population being rural, there's no way you will take, for example, to a school that is off-grid, computers that are consuming maybe 260 watts of power. So if someone comes up with a solution of a computer that is going to consume maybe 30 watts and be supported by renewables, I think that would be a very good innovation to support because the underserved will be served. Then how we do the feasibility is quite different from the usual. Mostly we look at impact in terms of economy. How much import substitution are we doing? You see that? Will the product be cheaper than what is being offered? Will it be of the same quality? So those are some of the aspects we look at. I don't know if I've, yeah.
Damali, you're going to close our session. But as you think about your closing remarks, you could touch on some of the aspects he has addressed on the Catalytic Fund on your side, how it might work, but also give us an indication on the size, expectation on size as well. Okay. And then perhaps a call to action. And then we can close the session. Thank you.
All right, thank you. So the Private Sector Catalytic Fund, someone did ask a question about the ticket size. And based on our feasibility study and our experience in working with the private sector of Uganda, is that we realize that not all companies are the same, depending on the value chain you're in, and not one size fits all. So we don't have a blanket ticket size. We have ticket sizes depending on the value chain. If you're a company that is in oil and gas, your ticket size is going to be probably different from someone in agriculture, someone in transport and logistics. So it will depend on the value chain that you're in, or the sector that you're in. So we are tailoring the ticket sizes to that. Again, trying to find a Ugandan solution, understanding that not all enterprises in all sectors are the same. Because otherwise, if you have a blanket ticket size, it may end up only helping, a few. You may ignore a certain sector that has impact, but probably their needs are not as high as, if you say your ticket size is $100,000. So we are going to be bespoke and sector-based in defining the ticket sizes. Then I did mention that the private sector Catalytic Fund has two arms, one the investment arm, and then the other arm, the business development services arm. That business development services arm is grant finance, and I could say that we've already raised the grant financing. We have a grant portfolio of $350 million at the moment, and that half, you would say, is grant finance, and it's continuing, but it subsidizes or gives the foundation to the Catalytic Fund, the investment side. So our goal, of course, being that we're Ugandan and we're here for forever, our goal is to have a private sector catalytic fund that is at least $1 billion worth. But of course, we'll start off with cycles. It will be revolving. Of course, the funds underneath it will close, because a fund under fund of funds. The funds underneath it will close, but it itself won't close, because we are Ugandan and we're here forever. It should be here in perpetuity, though the different funds should be able to close. And with those few remarks, I would like to call to action is, as Ugandans, can we support each other and support our industry? We know the problem. So wherever you are, wherever you're working, whether you are in a fund that's funded by foreign capital, find a way to ensure that it's actually impactful. So while you're complying with the restrictions, then I'm calling on to institutional investors, domestic investors, to also look at domestic and local solutions and invest in them, and also look at using local solutions, not a foreign concept copied and pasted here where it won't work. We're Ugandans, so we should be able to contextualize it and ensure that it will be working. Thank you.
Awesome. Thank you very much. Let's give a very large applause to our team today. I know for a lot of us today, this is new information. There is grant funding. There is a lot of initiatives to domesticate the conversation around local capital, private equity, building new ventures, growing Uganda together. And I believe that the message here is very clear. It's our burden together to grow these capital markets. We should not expect a solution to come from out there. It's going to be in these rooms that we solve these problems. So thank you very much. I hope everybody in the room has appreciated. Let's take a minute to take a photo. Some of us have to give evidence that we were here. But thank you very much, and let's give again a very large applause to the team.